U.S. stocks ended modestly higher on Monday after a trio of Federal Reserve officials backed the central bank's 50 basis point rate cut and supported future cuts. The Dow and Nasdaq closed up marginally, while the S&P 500 gained more than 0.25%. Fed officials Raphael Bostic, Neil Kashkari, and Austin Goolsbee remarked that last week's supersized rate cut served as an acknowledgement that current policy is putting too much pressure on the economy at a time when inflation is receding and risks to the job market are rising. But Shana Orzik-Sissel, founder and CEO of Bonrian Capital Management, said that rising bond yields suggest that investors may now be second-guessing the Fed's bold move.
The initial response to the 50 basis point cut was very positive. But the way that bond yields have reacted has suggested that the market doesn't necessarily believe that it was the right decision and that inflation may not be as under control as people think. And so now there's a little bit of fear that we might see inflation rebound as a result of the measure that the Fed made by being more aggressive in the beginning.
Traders' bets on the size of a November rate cut appear to be a coin toss between 50 and 25 basis points, according to CME's FedWatch tool. Among rate-sensitive growth stocks, Tesla jumped nearly 5%, while Meta Platforms rose 0.5% after Citigroup lifted its price target on the stock. Shares of Apple and Google parent Alphabet ended lower. Other movers included Intel, up 3% after a media report said Apollo Global Management offered to make an investment of as much as $5 billion in the chipmaker. And General Motors slipped 1.7% after Bernstein downgraded the carmaker stock to market perform from outperform.